Well, hello there. This is Bruce at Fleet Capital Management. It's Friday afternoon, the 27th of January, 2023. We had a good week in the market. We've had a good month in the market, as a matter of fact, and we are very, very, very close to technically ending this bear market and beginning a bull market. I'm going to show you that on the charts because I think that's important. So let's jump right in. There's a lot to show you, actually. The video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please feel free to subscribe to the channel. If you like the video, you can click the thumbs up or like button. That lets me know you liked the content. If you don't like it, you can feel free to click thumbs down, but I hope that's not the case. And always feel free to email me, Bruce at Fleet Capital Management. If there's anything in particular you would like me to review, as I do these videos on Fridays, just let me know, and I'm more than happy to do that. Our website, fleetcapitalmanagement.com, two buttons that you know well by now. This one will take you to our weekly market analysis videos, and this one will get you on my calendar so that we schedule a video Zoom call so we can talk privately and about your specific account. And please feel free to do that anytime you have a question, a concern, just want to go over your account. Please feel free to do that. I'm more than happy to always have a chat. Let's go over a couple of computer monitors to the trend analysis screen that I fill out every day. This is Friday the 27th. Remember, these are the trade triggers. That just means that if we have up in the daily, this is group one, we'd like to see one or two of these be up on this side as well before we make trades. Some things have changed. Well, in group one, you can see we are significantly in the green. We have been all week, and I've been adding securities to group one accounts pretty significantly. Group two accounts, we have a change. We went from neutral to up. This is very significant. And we went from down to neutral. I think this is going to be an up very, very soon, and I'll show you that. On the indicators, just the moving average indicators, last week, the 200 was the highest indicator, and all of the others were below it, which is, you know, it's not the best sign, but you could see they were coming up. We've had a switch now. The 8-day moving average is now above the 21-day. That's perfect. The 21-day is above the 200. The 200 is above the 50. I have little asterisks here that just designate that was a change. And if I could have blended bullish and caution, I would have, but we're really leaning towards bullish, and I'll show you why. And it has to do with this 50-day. I'll show you that in just a moment. Let's go to our go, no go trend graphs. On the left side is weekly. On the right side is daily, both on the S&P 500. You can see we started a new go trend, and it has picked up steam. It's now the blue bars, which is a little bit stronger, and the volume has been very strong. I love seeing that. When we go from this light color to the dark blue, that means we have heavier than average volume in an up market is exactly what we want. So that's perfect. On the weekly side, which controls group two accounts, we switch to the amber colored bar, which is the neutral bar. And I think we're incredibly close to going to a new go trend on the weekly. And here's why I say that. This is the momentum oscillator. And remember that price follows momentum. We had been for quite some time. Remember, this is a week for each bar. For quite some time, we've been riding the zero line of momentum, meaning going sideways. A lot of times that just means building a foundation, if you will. And this week, actually today, we came off of the zero line, and the momentum is pointing up. If momentum leads price, what do we suspect the price is going to do? Continue to go up. We also had the DMI, the directional market indicators, switch from red being the dominant color, which is a downtrending market. It switched, and now the green is up, and that could be starting a new green market. So we have a lot going on this weekly side, and that's why I believe it could be next week. It might be the week after, but because next week, and the only reason I say that is because next week is the Fed meeting on Tuesday and Wednesday, and they will announce rates on Wednesday. We suspect it's going to be a 1/4 point rise. I think the markets are less interested in the actual rate increase than they are about the Fed comments. And it has become crystal clear to those who pay attention to this that for some reason, the Fed chief wants this market lower. You remember back in the late 80s, we had Alan Greenspan call the market irrational exuberance. I think he may have had a point at some point, but it just kept going up. This Fed chief, for some reason, wants this market to go down. And I think that that's pure foolishness. I think that is outside the purview of the mandate of the Fed, which is to manage inflation and unemployment. That is their mandate. But we may have some volatility next week because he wants to see this market go lower. And I don't understand why, like I said. Okay, let's move on. I want to show you this chart again, S&P. We're back to daily. And here's that 200-day moving average. Remember, we needed to cross above and hold it. We didn't hold for a couple days, but now 1, 2, 3, 4, 5 days, we have closed above that 200-day moving average. That's very powerful. The white line is my shortest. That's the 8-day moving average, and that's just showing there's a lot of short-term strength. The next line, which is very hard to see, but the blue line has crossed above the 200-day moving average, the red line. That's a fantastic development, very, very strong. And the last one is this gold-colored line is just below the 200-day. When that gold-colored line crosses above the red line, and it could happen pretty quick because the 200-day is a very slow indicator and it's still falling because it takes a long time to make it curve. And the gold line is the 50-day moving average, is on an upslope, so those could cross very quickly. When that happens, that's called a golden cross. And what that means is, technically speaking, based on technical analysis, the bear market has ended, a bull market has started. Just like when the 50-day, the gold, let me go find it right there. When the 50-day crossed below the 200, that's called a death cross. And that happened very early March of 2022. Technically speaking, that's the beginning of a bear market. So there are a number of different qualifications for a bear market. Technically, you just saw it. It's the crossing of the 50 and the 200. Another one is when we are 20% below the high, the most recent high, that is a bear market, even if the 50 hasn't crossed. But we use, as technicians, we use the 50-day crossing below the 200-day, and we are just about ready to have it cross back up. And what that means is that the technical bear market is over, and we are in a bull market. That's what it means. So pretty cool, pretty interesting stuff. We're really close. And like I said, I've been buying a lot of stocks for Growth One accounts, and they're doing really well. And depending on what happens early next week, mid next week with the rate rise, I'm going to slowly start to add these growth stocks to Group 2 accounts. Once that 50 has crossed above the 200, all bets are off. We're going to go towards fully allocated portfolios. That's the goal. Fully allocated, because we're back in a bull market. So I wanted to explain that to you, and that's what's happening. I want to show you, I think it was all accounts. I don't remember, but we had owned a stock called MPC. MPC is Marathon Petroleum Corporation. Great stock. We bought it. It was running up. It was doing exactly what I expected to do. And then if you look at these candles, each candle is 1 day. Do you see anything that just sticks out like a sore thumb? Here it is, that one. So the market was going up. We had a stop somewhere probably right about here, because I always use stop management. And the morning of Tuesday, the market opened, and within a second after the market opened, the stock crashed down, took us out. We had a 4% loss because that's where our stop was, and ran right back up. And now you can see the stock has continued higher. This is the NYSE glitch that's been all over the news that you may know about. And I sent an article out as well. This was an error in their systems. I'm starting to hear rumors that it was a manual error in their systems. And U.S. stock investors lost, last I heard, and this will change, well over $1 billion because of a couple of seconds that this took place. It didn't happen for every stock on the New York Stock Exchange. It happened for quite a few, and we had owned one of them. Actually, we owned two, but the other one, it didn't hurt us. I'm working with the TD Ameritrade Institutional Trading Desk that I work with on a daily basis. I told them we're not very happy about that. They know they're getting lots and lots and lots and lots of phone calls. They are working with the regulators at the New York Stock Exchange, trying to bust or reverse these trades that for the people like us that had a stop in place that got knocked out, so it would reestablish our position in MPC as if it had never happened, and we would be nicely higher still. I'd love to still own that stock. I have absolutely no control over it. I'm not sure TD Ameritrade Institutional has any control over it. It's really in the hands of the New York Stock Exchange and the Securities Exchange Commission, the regulators. I call TD Trade Desk every day. They know I'm not happy about it. They've communicated that no one is happy about it, which is stating the obvious. And they said, we're working really hard and they'll let me know. And I will follow up every few days. It didn't hurt us terribly. But it hurt us, and it shouldn't have, because it was of no fault of anyone except for technology at the New York Stock Exchange. So I did want to show that to you. Let's see what else I wanted to show you. Let's go over to, bear with me. Let's go over to here. This is one of the areas where I track all purchases, and these are all the different scanners I use to find stocks. What is a scanner? A scanner is, you could think of it like AI, but it's really not. It is, I create a basket of rules of a type of stock that I'm looking for. It has to have certain attributes. And I have 4 or 5 different scanners that I use, and they all have different attributes because there's no one right way to buy stocks, but they're all attributes that I put in that I like. And that's what these scanners are. And for instance, I'll show you this GT scan. This is where they pop up, and I don't always take the stocks. If I look at the chart and I don't like the chart, or I just, something happens and I'm not in love with it, I don't take it. If we look at a report from the scanner, you'll see that it has 3 open positions, and those are all up, and it, you know, that's doing fine, but I don't take every stock. I take the stocks that I feel are the best of the best, if you will. So that's what scanners are. And then they all roll up into here, which is, here's all of our open positions since January 1st. And you can see we have, let's see, there's 2, 4, 6, 7 right now that are open positions. 2 of them are down. One of them's down 4%. One of them's down 0.48. And I just bought this today. So that hasn't even had any time. And I bought this today. It's up 0.85 so far. And we have some pretty big winners in here. URI so far is up 15%. Massey so far is up 17%. I'll show you those on another chart. But the bottom line is our losses are small. We're allowing our winners to run, and they all come from different scans. And then what I do is I evaluate every scan to see how the scan is working. And then I compare the scan against the stocks that I choose from the scan. And what I want is a higher win rate on the ones I choose. It means I'm choosing the right stocks. So that's the current stocks that we own. I separate out ETFs. We own a number of different ETFs since January 1st. What I don't have on here is we do own the Qs, QQQ and SPY, but we bought those last year. I may add them and put the price that was relevant on January 1st, just to add it to it so you can see a little more clearly. Anyway, we have 4 of these. ROI is return on investment. We have 1 that is down. It's only down just a hair less than 0.5%, so no big deal. And 2 of them, ARKK, which we bought on the 17th. Is up almost 10% already. I mean, that's just absolutely staggering for that short period of time. The Bitcoin tracker that we bought that on the 19th. It's already up over 10%. I think both of these are going to be extraordinary winners. If we get stopped out, we'll probably be able to go right back in within the next few days. I have signals that I use to alert me when's the appropriate time to go back in. So anyway, we're doing really, really, really well on those. And like I said, not a prediction, but kind of a gut feeling. I think these are going to be the two biggest winners in 2023, and I think XLE could be another huge winner and that's energy in 2023, but we'll see. We'll see what happens. Let me go back over to here and let's go over and just take a look at our stop management for a couple of stocks. Here's Bitcoin. That one came up first. Here's our entry price and here's our stop. Our stop has been raised, of course, and we're only 3% below our entry point, and that's going to come up. The reason it hasn't come up faster is because this was a really big bar, and because we've got a little bit of overhead resistance, a couple of trend lines. I want to get over that, and then we'll be in a no risk trade, which is always the goal, to get the stop level above the entry level. Then if we get stopped out, we are in a gain, which means we could go back into that stock technically the next day. If we have a loss at the time of sale, I need to wait 31 days before we go back in, just some tax rules. So we always want to get that stop above, and it could be right now, but we have some overhead resistance, and I'm a little nervous about that. So I want to give it some, all I'm doing is giving it breathing room. ARKK, we are way above, there we go, our entry point. And once again, we could move our stop level up, but we had a really big bar and we've got a little bit of overhead resistance with this trend line, and we have the Fed meeting next week. So instead of raising our stop too tight, I want to give it a little bit of room to move, to breathe, if you will. AMKR, Group 1 accounts, has not been doing well, but I'm not real worried about it because it's just going sideways. It had a run up, a pretty quick run up, and then sometimes stocks go sideways to catch their breath. The other thing I'm seeing on here that I really like is we had a run up and then it kind of fell down. It went back up. This is almost like a saucer, if you will, or a cup. And then this becomes what's known in technical analysis as the handle. So I'm not real worried about this. Of course, I'd like to get it above, but I'm just not worried about it. Aon you don't own, FTNT you don't own, Massey you do own. Let's go in here. And by the way, the ones that I'm skipping that you don't own, I'm going to show you that in a minute. Those are some stocks from the test that I'm doing in my personal account. So I track them, but you don't own them yet. Here is Massey. Massey is a fantastic stock. It's doing great for us. Our stop is 12% above where we went in. I mean, that's just beautiful. I've raised our profit target, and if this gets up above that little bit of resistance, I'll raise our profit target again. And I will also raise our stop level along with it. They kind of move together. So that's doing great. For those of you who are still in Microsoft, Microsoft is doing very well. It had its earnings. It had a big weird day the next day, but then it started because the earnings were really good. I think Microsoft's going to be fine. MBT you don't own. MU you don't own. I own that, and I'll show you that in a minute. NVIDIA, for those who still have NVIDIA stock, the reason I held it is because the underlying fundamentals are phenomenal. This is a great company. And I said, once this market starts to turn, NVIDIA is going to start to turn, and it's doing exactly what I had anticipated. So I'm happy there. The Qs we own, our stop is above our entry point, so that's good. It's got a little bit of trend line over resistance, but I'm not real worried about that. That's, there's different types of overhead resistance. SPY, our entry is just above our stop and moving higher. I'll move that higher once we get through this resistance. Tech is a stock that we own. We're up marginally, not a lot. We have raised our stop. We're only down 2.83% if we were to get stopped out. I want to give this a little bit more room to grow before we move that stop up. TS, this is a stock I purchased today. We are just a hair below where we went in. Good stock, high momentum, not real worried about that. Ulta, one of our winners. This has been just a terrific stock. Our entry is over our stop price, and this thing is just very quietly moving north, and that's exactly what I like to see. URI. URI is another phenomenal stock that we have. Our stop level is almost 5% above our entry level, so that's great, no risk trade. I have moved our profit target up, and as this continues to rise, I'll continue to move both profit target and stop level up. Well, it's had a great day. It just broke above this trend line. Let's see if it can hold that, and it'll do well. XLE, we are above our stop. Excuse me, our price is above our entry level. I have been moving our stop up, and we'll give that time. XLK is another one we're in. We are clearly above our entry level, and the stop just keeps moving up. And I think that's going to be fine as well, and terrific. So I mentioned a couple of stocks that you're not in that I am. Let me show you a little about what that is. Before I do that, Group 1 accounts own this defined outcome ETF. I don't think this particular one is in any Group 2 accounts. It's a BFEB, which means it matures the last day of January. Right this minute, the investment is down 1.77%, while the SPY, or the SP 500, is down 9.84%. If next week we can get just above the SPY, just above that dotted line, then this will go up closer to zero, and I plan on liquidating this investment probably on the 31st, because I need to make room for more stocks now that we're more in a bull market. So I hope that makes sense. And I'm evaluating each one of these defined outcome investments. I'll tell you that Group 1, probably by April, will not own any of these defined outcome ETFs. Group 2 will own some selected, but our stocks are doing much better than these, so why not use our stock picking? So the system that I am testing that you're not in right now is called SeasonX. I made a mistake last week. I said they're out of Germany. They're not. They're out of Vienna, Austria, which my wife and I have visited, and it's a magnificent city. What they do is their computer systems are very sophisticated, and they search for patterns. They search for patterns that look like they are repeatable. For instance, I'm in, these are the 4 I'm in, Micron Technology. I'm going to change the way this chart shows. Don't worry about that. And I'm going to say I just went into it, and then the line I just put up is today. So I've been in this just a day or two. The reason I went into this is because over the last 10 years, from January 25th through, where is my pattern date? There it is. From January 26th through February 18th. So that's 10 years. Of that date range, this stock has gone up 100% of the time. There were obviously 10 trades right there because each year had this pattern in it, and it has not experienced a loss in that time frame. So in that time frame, which is rather short, January 26th through February 18th, which is 17 trading days or 23 calendar days, it has averaged a rate of return of 6.72%. Think about that, 6.72% in 17 trading days. Now, that's the average. The most it's done in that period of time is 11.35%. And here we can see year by year what this particular stock in this particular pattern right here has done for each year. And the max rise and the max drop while it was rising, because you can see some of those drops. So this is a stock that I own, and it's doing so far very, very well. I'm testing it with real money. I don't believe in testing without real money, because real money drives emotions, and that changes the way you make investments. Aon is one I'm in. You're going to see lots of similarities. It had a 100% win rate. That's how I found it. It's averaged 7%, which is just extraordinary. It has a fantastic Sharpe ratio, which is return to risk. I'm in that, and I'll show you how I'm doing in all of these in just 1 second. I'm in M&T Bank, 100% win rate over 10 years. A little different date range because these are all different. I look for these all the time. It has a little lower rate of return. That's okay. 4%, 4.5% for 1 month. It is a terrific rate of return. And I also own Fortinet. This one had a 90% win rate, but it had a really high average rate of return, which gave me a really high Sharpe ratio. And this one is from January 21st through March 2nd. So this is the system that I'm testing. And I can go down here to test Season X. And these are my trades. And what you will see is one of them is down 0.71 so far. One of them is down 0.46. Think about that. Those are fairly small drawdowns. Fortinet is up 4% already, and Micron is up over 3.5% already. So I will hold these until their pattern maturity date, and then I'll see how they're doing. I'll see how many winners I had, and how close they were to the average returns. I keep statistics on every single thing. And if it works as well as I believe it could, I will start using this for you. It'll just be another one of our systems, another one of our scanners, if you will, to find stocks. And I love having different methodologies because it gives us different types of stocks. Not all stocks work every day. So this is very interesting. If it only gives me a fair average compared to what the system has been doing, I may wait another month or two, keep testing it on myself. I've purchased the subscription, but I want to make sure it's working first. So that's the story with that. Just to show you really quick, here's our 5. Here's GT stocks. These are some stocks I didn't take. That's why they're great. No trade. So I don't take every stock that the scanners give us. For Season X, I take, because I hand-pick them, I've taken each of these, and BF just means they're in my account and how they're doing. Stockopedia is some stocks. There's that MPC that we were in. It shows red as a loss, 4.1%, but I'm not using it in my calculations because A, we may get it back. B, it was not a loss attributable to anything that the system did wrong. It was the New York Stock Exchange. So we'll come back to that. Those stocks are doing just fine. And then I have a scanner for swing stocks. I added TS and SQM this morning. Here's where I found Ulta. And I have another one that I haven't used yet called CC stocks. So 5 different ways that I find stocks for our account, and they're all doing well. Also, for my options traders, and we're almost done. For my options traders, I did put in a new S&P 500. That's what SPX means. On January 24th, it's doing really well. Actually, I can show it to you, I believe. Let's see here. And let's go to position analysis. There it is. Okay. So everything with options are confusing, but we are up 35% of the total profit that we can possibly get in this stock. So in this option, and since I'm on this page, let me show you how this works because it's really fascinating. My target is 65%. So we're more than halfway there. We have 20 days left in this contract, and we're doing great. We're doing great. I'm going to do this really quick because this gets a little bit complicated, but just focus on the horizontal. Don't worry about vertical, just the horizontal. This is the price of the S&P 500. The price of the S&P 500 closed today right there, 4,070 and 48, okay? This dash right here, that's where I put this trade on. And the way it works, now let's pretend this was a stock. Let's say we're just buying a stock. Stocks are binary. If the price of the stock goes up, you make money. If the price of the stock goes down, you lose money. And if the price of the stock does nothing, you haven't made or lost money. So it truly is every time I hit enter and buy a stock, there is theoretically a 50% chance that we'll win and a 50% chance that we'll lose. Now, I use a lot of analysis trying to skew that so we have more winners and losers, and we do. But theoretically, it has a 50-50 chance. For the option, this is where we bought that option. And here's the coolest part. This is why I like these so much. And I say they're not high risk. If the price of the security, in this case, the S&P 500 goes up, which it has, we make money pretty fast, very fast, because these things are leveraged. But here's the key. If you watch this box over here, we have January 27th, which is today. We have February 27th, which is the maturity of this particular option, okay? When I bought it, if you look over to the left, don't worry about the top number, worry about the bottom number. The maximum gain as a group we can get is $23,766, period. That's the maximum gain we can get on this option, okay? And we get there faster if the price of the security moves up, okay? But if the price of the security does nothing, and it is then February 17th, look at that number. It's $23,766. So if the price does nothing on the date of maturity, we get the full gain that we were hoping for. That's not true in a stock. If the price goes down, and as I'm going to move the price down, don't worry about the top number, worry about the bottom number. If the price goes down, 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 I'm going down 100 points. On the S&P 500, it goes down. Let's see where it is, right? Wow, this is amazing. Okay, if it goes down to there, and theoretically you would think, well, we've lost a lot of money. No, we haven't lost a penny. We got the full benefit of the $23,766 that we can make on this contract. Do you understand that? So if the price goes up, we make money fast. If the price does nothing and we hold it to maturity, we make the full profit. We're trying to get to the profit faster. And if the price goes down, even 100 points, right here, what this dashed line is that's break even. If the stock price went down to that and I sold it there, we would break even. We wouldn't win, we wouldn't lose. If I didn't wait till then and I waited to maturity, we would get the full $23,766. That's why I like option credit spread so much. Instead of being binary, we have about a 70% chance from day one of it working. And why do I know it's 70%? Because it's based on something called delta, which I won't go into right now, but a delta of 30 means I have about a set POP is not your dad, it's a probability of profit, meaning what's the probability that we'll make any money at all at maturity? It's 70%. And that's what I try to do. Sometimes I can find them and they're 76%. So a stock, remember, theoretically is 50%. When I buy into this, we already have a hedge because we only have a 30% chance of loss. And because of the timing and the analysis that I use, it's probably higher than this. So anyway, I just thought you may find that interesting. That's really all I have for you today. Next week, we do have a Fed meeting on Tuesday and Wednesday. They will announce rates on Wednesday. We meaning everybody in the market, all analysts are anticipating a 25% increase in interest rates. Remember, they've been doing 75%, 75 basis points. So 25 basis points means they're getting really close to being done. But the key is not the 25 basis points. The key is the comments that Fed Chairman Powell makes afterwards. And he has been very antagonistic to the stock market. We don't know why, but I think we'll be fine with that. The market can now completely see through what he's doing. So that's a story. If you have any questions, call me, email me, schedule a Zoom with me. More than happy to talk about anything. Our stocks are doing great. Group 2, I know you may have been a little jealous watching some of the gains we had from Group 1, but you're next. You're really close. We're going to start adding those stocks depending on what happens this next week. But my guess is we're going to start adding stocks for those accounts too. So that's a story. Have a wonderful weekend. I will see you back here Monday morning, bright and early. Actually, it'll be dark and early. See you then. Bye-bye.